The direction trigger theory. What is a theory? What is a trigger? First of all, the first question is, what is a trigger? The most important question is, what is a trigger? What is a trigger? Is what so a trigger is any stimulus such an event, an object, a thought, a sensory input that automatically set off a specific reaction or a process depending on the context. Terms has several meanings. Okay. So it's a stimulus, right? It's a stimulus that create a reaction. And what is a stimulus? Any change in an organism's internal or external environment that cause. Okay, any change. Any change of an organism that cause a specific reaction. So a stimulus is a cause, right? It's something that causes a reaction. So a trigger is a cause. A trigger is a cause. Is the root cause of the of a movement. Is a a trigger is the root cause of a movement. So when I say direction trigger, I mean by direction trigger like direction triggers, like everything that you will see on the chart. Every specific thing that you see on the chart that make the price move either the upside or to the downside. And there is only two direction, but there are many triggers to those directions, and they don't. It's not the same trigger. What trigger the direction to the upside is not necessarily the what causes the direction to the upside is not the same thing that causes the direction to the downside sometimes, but they are similar in some ways. So the cause, the causes are what we will be finding. So what I will show you now, I will show you the causes of a direction. All of the root causes. Is it causes in English? Yeah, the root causes, the fundamental reasons why you see the price going up and going down. So the second most important question is what creates the direction? So what is the cause? What creates the direction? What are the elements that create that direction? Is it a single element or a combination of some element? That is the question that I will be answering in this theory. So for that, draw two rectangle per time frame for zone of direction from entry to continue. From the entry zone, you have the continuity to take profit zone, like reversal. An hyper elite trader sees buying and selling at the same time per time frame, per time frame. So what I'm trying to say here is that you need to, if you have, we have set of time frame like this, weekly, daily, or an H4, for example. In each time frame, what you need to do on your screen, right? You need to always have, if the price is like this, right? You need to always have two two rectangles on the on the chart. The green rectangle for the buys and the um, red rectangle for the sell. Like the rectangle is the symbol of a direction, like direction to the upside. A rectangle is a symbol of the direction, like direction to the upside. And the red rectangle is the direction for the downside, right? So an hyper elite trader has things that he sees on the chart. I mean, hyper elite, not just a simple trader, hyper elite one. Has things that he sees on the chart, has element that he sees on the chart. That gives him the reasons for a buy and the reason for a sell. Those are the things that I will be showing to you. And the first thing is the economic news. The economic news trigger a direction. The economic news trigger a direction. Look, for example, so I said that an hyper elite always sees at the same time. If you see only buys and you don't see where to sell at the same time that you are seeing a buy, it means that you are not yet up. You have not yet achieved the hyper elite level. Most elite trader only knows where to buy, but they don't know where to withdraw profits. Meanwhile, it's the withdrawal of the profit that gives you money. So you need to know where to buy and where to sell at the same time, because it is where to buy to sell. If you enter at the buy, it is where to sell that will give you the profit, so that you can withdraw, you can take profit where you have to sell and start selling again for another entry to the downside. And when you start selling for the downside, you need to know where you will be buying to the on the bottom. So an hyper elite sees that at the same time. It doesn't only see the entry, it also see the take profit in one time frame. Like, for example, this one is daily time frame. Let us say like that. So the first thing that trigger the direction is the economic news. The first thing that trigger the direction is the economic news. 3 days, 3 days to 1 day before a major economic news, the market often moves to one direction only, and it moves for a long time. For a long time, we have, for example, economic news like NFP, NFP, CPI, uh, um, how they call it in English again? Employment rate, employment, employment is not the employment rate. GDP, inflation, inflation. What else? GDP, inflation, even GDP, inflation, employment rate, CPI, jobless. Jobless and employment is the same thing, right? Jobless, jobless. Mm, like the Fed announcement or President Trump, not the United States president, not President Trump specifically, United States president, mostly for the US dollar pair. Even the, how they call it, les jours fériés, um, national days, les jours fériés, les fériés, holidays, even holidays, right? Like or national days, holidays. Those are major important economic news. Let me tell you something. Most economic news, like all of those economic news, make the market be scared of about what? Uncertainty. Uncertainty. Why am I saying that the price moved to one direction 3 days before the economics news here? If the economics news is in 3 days like this, the market will move in one direction before this economics news is announced. Is because, right, since nobody has the data result of this economic news, right? Every speculator, because a trader is a speculator, every speculator who try to predict the market, speculator, prefer to withdraw his money and not be inside the market during a major economic news announcement. So days before, the big speculator, those large speculator will 3 days before they will start pushing the market to a point till a point where they can make some, how do I call it, some profit, some withdrawal, some good margin before the big announcement. And speculator, one thing that speculator doesn't like is uncertainty. Because if you are doing predictive analysis, like the one that I'm teaching you, and I'm showing you, predictive analysis. If you are doing predictive analysis, right? If you are doing predictive analysis, right? If you are doing predictive analysis doesn't like uncertainty. Because if you want to predict something, you cannot start using the word like if, maybe, maybe. No, the word maybe and ifs are not good on predictive analysis. No. That is why the market, the day of the economic news, the market stop moving in one direction. It start moving almost at the same price, like a range, right? Like a range, till the data are read. So, so how is this a trigger of a direction? The way that this one is a trigger of the direction is that if you know that the economic news is, for example, we are Friday today, we have the NFP very soon and the unemployment rate. But let us say, for example, Wednesday we will have the inflation rate, the CPI, very big economic news. The CPI, the jobless claim, those are the very big economic news. Since today we are what? We are Friday. Let me draw a small calendar. Today we are Friday. Wednesday, Wednesday next week. Wednesday next week will be. Wednesday next week will be. A day where we will have CPI, inflation, and what else? Jobless claim, I think. On Thursday. But Tuesday and Monday, you will see the market move to one direction only. Like one direction. Maybe it will be a sell direction or just a buy direction. Before these news are called out by the people who call it out, who read the data. All right. But today we are Friday. Okay. Today we are Friday. So what I will be doing is that, right, I wanted to show you on the graphic chart, like I wanted to show you Like for example, an important economic news today, in Wednesday, and I show you 2 days before what happened, how the market moved to one direction before this important economic news to prove you my point about this. This is just an observation that I did. I wanted to do it on this video, but I don't think that I have the ability to, because certain if you give me some economic news, yeah, but I need some economic news also behind for me to prove you that. For example, today there is what NFP, right? NFP is today, and 3 days before the market moved to one direction like this. Okay, that's a little bit of a proof, but I don't like to only take one event. I prefer to take like, I don't like to take only one case that work. I prefer to take like 10 cases that work. So to prove my point about this one, like 3 days to one day before a very important economic news, the market will move to one direction. That's a direction trigger. I would prefer to take 10 different economic news. Maybe it will take me 1 month, 2 months, but I will be doing live YouTube analysis so that you can go and look. And I will call out some economic news, some economic news in advance. Like we will be reading the calendar and make a date, like make a line like this, the date of the news, and 3 days before the news, right? And we'll be looking at how the market has moved. If we can, when we can, I can show you that it can on 10 big economic news, it has worked even 7 times. It means that what I'm saying is really right, right? So I've been observing that. But for this video, I struggle to prove you it with 10 examples. I only want to have this one example that the market moved to one direction before today. See, the market moved to the upside for 3 days already, 4 days already. Today, the market doesn't want to keep moving to the upside because of the big news, NFP, the two big news, NFP and employment rate at 1 p.m. 30, right? Today we have in 1 hour. So surely the market is not certain about what the news will make the graphic do. Maybe it will make the chart go to the downside, the way I'm seeing. Maybe not. And the market doesn't like that uncertainty, right? You have a lot of bending stuff like this today. You have a lot of bending stuff. Anyway, this part is a sell something. Is a sell zone. So 3 days before and on the day before the new economic news holiday, the price will make a very long move to one direction. Very long move. So that is one of the biggest realization that I give you as a cause of a movement days before because of uncertainty. The market doesn't like uncertainty. When you do predictive analysis as a speculator, you want prediction need to work with certainty. When there is an uncertainty factor, people will move their money. Money doesn't like uncertainty. If you have money in your pocket and they tell you that in your quarter around your home, where you are going, when you are going home, there are thieves that are shooting on people, and you have your money of the rent, your rent money, your school money, your food money. You fear that they steal you, right? You fear that they steal you. So money doesn't like uncertainty. Money like that, when you go back like that, everything is peace. You have nobody who is looking at you with some weird eyes, straight up, checking you like crazy. So now let's now look other the next direction trigger. You have the direction trigger you have many direction trigger. First of all, you need to know the time frame of the direction trigger. The time frame are the root time frame. The root time frame. It's not every time frame that have direction trigger. The only time frame that gives direction trigger are the root time frame. Those root time frame, here are the two root time frame. First of all, the investor time frame and the swing trading time frame. Investor time frame are the 12-month, 6-month, and 3-month. Those are the investor time frame. Now, the swing trading time frame are monthly, weekly, daily, and H4. All right. This is swing trading time frame. Those are the direction trigger time frames, because those are the one who actually lead the market to move to one direction. So that's why I put them here. You need to know that when you find a direction of the market, you find it on this time frame, not the way around. Okay. So now the first direction, the first element that make the price move, the first trigger is Tenkan bending, is the bending, the inclination, the bending of one line, bending of a line. We have, first of all, Tenkan bending. You know that Tenkan bending to the upside is a direction that is triggered to the upside. When the price move and touch Tenkan, you know that the price will move to the upside. And it's a very early trigger. Why is it a very early trigger? It's because, for example, let us say that you have a weekly setup. Let us say that you have a weekly setup like this. A weekly Tenkan setup. Like this one. And then you do the TS2, you go on H4 to enter. You will see that it is early because on this setup, this Tenkan inverted, right? Tenkan bending, the first person who give on Ishimoku line, the first what? The first line that gives the direction is Tenkan bending to the upside, compared to Kijun bending. Kijun only start bending to at this level, and the first time that the Kijun got touched is far above here when the movement is finished. It's almost finished already. So Tenkan bending to the upside is the first direction trigger, the earliest one. Then Kijun is a very sure direction trigger, because when Kijun bend to the upside is because it's mostly because if Kijun, for example, if you see the embedded Kijun, for example, let me take this one. It's a very short one because when Kijun is already bended to the upside like this, inside the cloud here, right? The market keep moving to the upside, and unless Kijun start bending down back like here, for example, at this level, you can stay in position. Very sure, because Kijun doesn't bend all of the time. It takes time to bend Kijun, but Tenkan bends almost all of the time, like bending. Meanwhile, Kijun have stayed very steady. So when Kijun, right, so mostly before the cloud or maximum inside the cloud, when Kijun bend like this and then the price touch Kijun like this, before the cloud or inside the cloud, that position will go very long to the upside. So the next one will be SSB. SSB is a very short one. SSB. Enter on the rebound on Kijun SSB inverted or SSA. Why am I saying that? What delivered? Uh, for example, SSB is a very short one because look, this SSB is short for sure because um you know what? SSB is plotted not instantly, but in advance. Before candle touch this SSB, candle were first of all on the back here, right? The candle were back behind that like this. This is where the candle were. And SSB was already plotted to the in the future. So it is literally something steady. You have candle above here, but SSB is already plotted. When candles start going down, SSB is already also plotted in the future. So you just come and meet somebody who has a stable inclination already. It doesn't depend on you bending down or going up, bending down. It's stable. So it just gives you his opinion of the direction in advance. So it's a very stable. It's a very stable line. Even this one, see, right? Mostly in the direction of the main, mostly during toward the direction of the main of monthly. So where do you enter and how do you enter when you have a direction that has been triggered? You need to enter on Tenkan inverted when doing the time frame skipping by 2 method, and you take profit inside the in in the root time frame. Um, what do I mean by that? So if you have, for example, this daily Tenkan that is bended to the upside. If you have this daily Tenkan that is bended to the upside, you go on 1 hour, right, to enter doing the TS2 method, right? You enter somewhere, and then your take profit will you will need to stay on daily to have your take profit. Your take profit will be the V breaker. You place a line like this, and you will say, okay, when the market will break this one, if every candles above here will be my take profit. Okay, that's how you do it for the game. Take profit. So you enter because the direction is given by Tenkan that is bended to the upside. You enter here and then you TP above. All right. So that's how you do it. Now, the second element that help you understand what cause the market to have it to change to create a direction is the ticket cross. The ticket cross is a super very very short offshore trigger. See, for example, when ticket cross crosses here, right, it's very you have no doubt that the market will go to the upside, right? You have no no doubt. It is generally a very sure element. But that's not the case of Shiku and price courses. Shiku and price courses is not sure enough because you need more information to make a decision. You cannot just make a decision with Shiku and price. It's very difficult. It's very difficult. You need one more element or two more elements. Let's say, for example, let me take an example that is really tricky. If you say, "Oh, I will buy when Shikuku go above, then I will sell when Shikuku goes below," you will be deceived. You would be deceived because Shiku doesn't work that way. You need all that information, but with the ticket cost alone, you can make a solo decision with it. Let me take this example for the case. When Shiku goes above the price here, when Shiku goes above the price at this level, so you may think, Shiku went above the price. Let us buy. Let us buy what? Let's just buy this price here, right? But the problem is that you forget that there is what? There is an inverted SSA here. And an inverted SSA is a big resistance for the price to keep moving up. That's a very big resistance for the price to keep moving up toward the upside. So Shuku alone is very tricky to take a decision only based on Shiku. Because Shiku is compared to the price. Shiku is compared to the price most of the time. I mean, the Shiku price cost is not that sure because you need another element. You need, for example, a an element of that I call here SSA inverted, right? SSA inverted to the downside. So now the cloud is also very sure, right? The cloud is also something very sure. It's not the super mega sure cloud, but you will see that most of the time when the cloud goes to the upside like this, it keeps going. It keeps going. Just keep going. When the cloud goes, SSA goes to with SSA causes with SSA cause with SSB. It keep going to the upside. It has a lot of certainty factor, right? Um, Even though sometimes like these alien eyes, I call it alien eyes in my previous video. Those alien eyes may make you think that the price goes to the downside. Meanwhile, it's just a correction. But you can deal with that because you understand that, right? You understand that. So the cloud cross is also a very important one. But the best two one are TK cross and this one, KSB. KSB is the one that is very confirmed. When Kijun crosses above, like for example here, when Kijun crosses above SSB, you have the ability to start buying on those lines with confidence. Even though this one crosses, but it kept going down, but that's not the case. It is the case sometimes, but it's not the case all the time, right? Those type of fake out. That's why my strategy is called KSB. I don't use it like I don't preach it about a strategy because of the fact that every strategy loses because but and you need to have read rate of the context of the market to not lose in the market. It's not the strategy will not save you. But KSB is a very confirmed one because most of the time when Kijun crosses crossed above SSB, the price moved to the upside. That's what you can see. The price moved to the upside. Okay. So where do you enter on an Ishimoku line bounce? And why do you do you take profit on a V breaker of the good time frame? So for example, if the cross is a trigger of a direction, like let us say the direction will only be made when Tenkan will cross, Kijun will cross above SSBA. So we have a direction to the upside. You enter when the price touches SSB. Okay, that's where you enter. And now your take profit is this high here, this high, this V breaker. Your first take profit is this V breaker on H4. That's H4, by the way. So it's the same thing that's happening now. But okay, I don't have an H4 example. All of these are just already late. Mm. What? Okay, watch this. The gold have not yet went down. Like the the Kijun has not yet went down. When Kijun will go down on gold like this, you will be selling at this point, and you know where your take profit will be. Your first take profit will be at this uh, at this V breaker. Yeah, and then the next take profit will be at this next V breaker. That would just be an obvious trade if you have something like this. Just waiting Kijun to break. So that's it. Those are the two, one of the two direction key that those are the basics of Ishimoku Vegeta for direction trigger. What cause? Causes of line causes it. Inclination of lines. Causes of line cause the direction to go either up or either down. Inclination of line cause the direction to go either down, either up. That is the basics, and that is very you need to read it in a strong way. If, for example, if you go on a monthly, on a weekly setup on gold, let us say you have this weekly setup on gold, and then you go on TS3. You go on TS3 on 1 hour, right? How do you know that the market will start going up? Ticket cost in 1 hour must go to the upside, right? Ticket cross KSB must go to the upside like this, and then you start buying the deepest line, right? That's how you know that the market is going to the upside for a high time frame setup. So now, um, so bending of a line and crossing of two lines, like the volume, are the stimulus, the root cause of a movement, a directional movement. Now we have now two type of other direction trigger, the type for continuity and the type for reversals. So let's start with the type of continuity. The first continuity element the direction here is the red pullback. What is the red pullback? The red pullback is that when the price is going to the upside, when price starts to bend to go down, it creates a red candle and then goes to the upside and create again a red candle when going down, like this, right? That new red candle must touch the old red candle if the price has to go to the upside. They must touch each other at least. The wick must touch. The new red candle must touch. So that's the red pullback. The new candle must touch the old candle. So the red pullback. So this happens often at the top of Tenkan without touching the Tenkan during the fresh chicken cross. And when the price finally touches Tenkan, it can go down the red candle that serves as a support. So let me show you some example of the red pullback. For example, here is the red pullback. The price going up, going down, then going up again, then going down. The thing is that the price went down here, go up, but for the price to keep going up, this red candle has been created, and this wick of this green candle has been created close to the top of the red candle here. Like if I remove Ishimoku, right, like this. So this is the top. So the wick of this candle almost touch the red candle. So the pullback has been successfully made, and that created the price to go to the upside, and that appear above Tenkan. It appear above Tenkan. It appears above Tenkan. So because since the price has moved to the upside, Tenkan hasn't been touched up until here, right? Up until here. So the red pullback has been given since. And when Tenkan is touched for the second time, that's the first time. When Tenkan is touched for the second time, it goes below this red candle, right? Below this red candle. That's what I'm explaining here. So draw a rectangle between the wick and the body of the red candle on which the new red candle will bounce. So what I advise you to do is what? For the red pullback, draw a rectangle like this. You draw a rectangle like this so that the when the price moves to the upside, when the new candle will be created like this. the price will bounce on it, right? On this rectangle, then continue to the upside. Okay. You could have also drawn a rectangle here between the Boji and the wick. Draw a rectangle between the Boji and the wick here. Like this one. Then the price go down, hit it. Okay. That's what the red pullback is made of. That's how you do for the red pullback. So you enter, you take profit on the V breaker with a green candle from the red candle which serve as a support. So from this red candle that serve as a support where you have entered, the take profit will be the V breaker here above. So when you enter at this level, take profit will be this V breaker. So when you enter here, the take profit will be this V breaker on daily, right? Same thing for this entry, for this next entry. You enter on this one, the take profit will be there. So that's how the red pullback work. So there's a news economic that has been read, and the price hasn't moved that much down. The price has moved to the upside. Nothing has changed to the downside. The NFP is not like bearish. Everything is going to the upside. So anyway. So nice. So now the next continuity direction trigger is when the price is in the air below Tenkan, below ticket fusion, without touching Tenkan number one. So there are times where in weekly, the price is in Kijun, and in daily, the price has touched SSB daily like this, right? And when you go on H4, you are at this level like this one. You are at the level where what you only see in the chart is this. You only see on H4 a horizontal fusion TK cross is in fusion and horizontally, perfectly horizontal. And the price is at the bottom here on the empty space, touching the weekly and the daily setup. Now the price has started to move to the upside. You know that the horizontal fusion, like this one, drag the price toward the fusion, right? So the price moved to the upside till this level. How do you enter here to sell? How do you sell at this level? How? You sell how? So I'm saying in the document that when the price is inside the air like this, almost in the empty space on 4 hour, what you need to do is that this week, due to a sharp drop due to the sharp drop caused by the V breaker on Tenkan hitting VRS in the empty space, So that means what? That means that because I want to answer the question, how do you enter and sell during a fusion? So on weekly, the price was at break this high at this level, right? So the price were at this level of the candle. Then the price went down, dropped, and touched a weekly setup. Okay. When the price touched the weekly setup like this, so the price touched the weekly setup, the price went down, reaching Kijun setup 3. Then the price has since recovered slightly, but still expected to fall back to Kijun setup cut. The price is currently on daily setup SSB. So what I mean is here is that right? We had setup number 1, Kijun, setup number 2, setup number 3, and setup number 4 of Kijun on weekly. That's what I meant there. So we were on setup number 3 Kijun here. The price fell down, moved to the upside, and we still expect the price to keep falling down again. Okay. So, but on daily, we are already on a SSB setup. So in H4, what you see is a perfect fusion and horizontal TK, right? But the price are at the bottom of the TK and rising against the TK fusion, but has not yet touched Tenkan even once, and the price is in the void. So when the price has touched daily SSB like this, when you go on H4, you will see that when you go on H4, you will see that the price is going to the upside on H4 and is in the air here. The price here at this level has not yet touched Tenkan on H4. So the question is, how do you trade it? How do you enter when the price is in the air and you see a TK fusion on H4 like this one? What you see is literally this TK fusion. Price is in the blank space in the air here at this level. How do you sell this one? So to sell that, you need to follow this scenario. H4 is in TK fusion after a Tenkan going down in the air. So you need to go and enter on SSA on 15-minute SSA or SSB to sell, right? And the take profit will be on Tenkan inverted H1. So first of all, let us look at the entry. The entry, you go on 15 minutes, right? On SSB, you sell this part. So now you go on 15 minutes, right? You will be selling the market at that level, at that point on SSB. So what you are doing is literally doing this. The time frame where you see this time frame where you see the fusion, where you see the fusion is on H4. So you drop 2 time frame below that time frame. So you do a TS2, and then you enter on SSB. That's how you trade it. So if you see a fusion of TK, the price went down and the price is in the air like this, hanging. So at this level, drop down to 2 time frame below on SSB and sell when the price touches SSB of TS2. And that is where you can now sell. And normally, the first take profit, you can put a stop loss like depending on the number of people, like 20 people is enough. And the first take profit will be this V breaker here at the bottom, right? The first take profit, the first logical take profit. Because if you sell, you need to aim first of all the V breaker. Okay, that will be your position. So, but you can also decide that if at any time that Tenkan in 1 hour will be bended to the upside like this, I will take my profit here. But if you do that for this case, you have less return on investment compared to having a take profit here below. But it's just a means to tell you that okay, the price will drop now. The normal take profit is at the V breaker here. But if at any time I see Tenkan bending to the upside at on H1, I will take the profit. But if not, that will be the best take profit at the bottom here, right? On during the V breaker. So even 15 minutes, you can have also a take profit on 15 minutes and can invert it to the upside. But I don't advise those to kind of invert take profit. It's best to have V breaker as take profit because V breaker as take profit come from a big time frame zones, right? It comes directly from H4. You have entered here and then you sold a take profit on this place. So the entry is like is also another entry can be also you enter on Kijun H1 or Tenkan at the same time when you enter at SSB 15 minutes. So if you go on H1, your entry can also be starting from H1, Tenkan. Okay, and that's it. That's exactly H1 Tenkan too. Where you see SSB 15 minutes, it is exactly on H1 Tenkan, right? This is not Tenkan inverted, this is Tenkan H1. You also have a sell on Kijun H1 like this. You also have this cell that went till to just that level, just below Kijun line here, right? It was also a good sell, more than 100 pips. So you had that type of entry and take profit. Okay, the take profit will always be based on V breaker. Okay, but obviously it's not all of the time that the V breaker exists. So close to the V breaker is already a good take profit. So that's how you trade the fusion of the price when the price is in the end. I spot another fusion somewhere at this level on weekly. Let me check something. This is a different one. Okay. This fusion, right? Let me put this bar at this level. This is the fusion of The TK fusion of weekly was like this. The price doesn't touch nothing, can nor Kijun. The price moves to the upside to this level. On H4, where do you enter? Is it in 15 minutes? Is it on SSB? Is it on SSB? Let me check. Or is it on Kijun? SSB. So it means that you see, that's what I said. You enter always on SSB, touch. You enter at the sell when during the fusion, you go on TS2, you enter at the sell when the price touch SSB, and then you aim for the V breaker, yeah, down there. And that's your position. That's how you trade this seed during TK fusion. That's how you trade. That's exactly how you trade. So that's a direction figure. That's what calls the direction. That's what calls the direction. The TK fusion in the air with price in the air. The next one is the snake. Recording in progress. The snake of TK, right, is also something that trigger the the direction. The snake of TK is when Tenkan goes to the upside like this, and then Kijun goes also to the upside, right? And they are close to each other. So both of them are close to each other. They go all to the upside, and the space between them is very tight. But it's not just that the space between them is very tight. It's mostly because both of them are looking to the upside together at the same time. For example, this one at this level, that was a snake, TK snake. This up, this one up. So mostly from this candle. That's a don't miss this period type of snake, right? Don't miss it, right? Don't miss it. Another snake was here. Super strong snake, this one. Like super strong snake. Very tied to each other, very close to each other type of snake. So it triggers the direction, especially on H4 or H1 after a ticket cross KSB during a push. It is strong, is a strong evidence of a bullish bullish impulse. You saw evidence of a bullish impulse, right? All right. If we go on H4, if we go on H4, for example, and look for snakes, this one is a nervous snakes. Oh my God. This down one is a nervous snake. Let us take this one on H4. You see this snake, this type of snake, right? Is a don't miss this one, right? But this other one is a skinny. It's not a snake because it is a Tenkan and Kijun are horizontally parallel to each other, horizontal and parallel. So it's not a snake, it's a skinny. Tenkan and Kijun are just close to each other, but they are not bended to one direction together. A snake is when two of them are bended to one direction. It gives a direction for the price. So if you have to enter at this beginning of the snake, you should have been entered since here at the beginning since, for example, if you have gone on H1 to enter, you should have been on that trade toward the upside without even thinking, without even blinking, since minimum max since maximum year. Because if you are not in the trade at this point, the trade will have gone and left you and leave you. It will have gone and leave you for a long, long, long time period. Because a snake is a very powerful movement that make the price goes like very quickly, very fast to one direction like this. That's a snake. We also have another snake. Okay. So how do you enter in a snake? Buy the first tenkan or kijun during a snake on 1 hour, yes, and take a take profit on the V breaker on H4 daily or weekly. So the entry is on first tenkan touch or kijun touch of the snake in 1 hour. This is this one, right? This one is the first tenkan touch in 1 hour. This one. After this TK coach, this one is the first tenkan touch. And the take profit will obviously be in H4 minimum. You add V breakers. You add a V breaker here as a first V breaker. The second one will have been at the top here. So, so you could just have aim at this point or at this point. As simple and easy as that. So next one is the setup 1, 2, 3. The next type of um, direction trigger is the setup 1, 2, 3 of Tenkan. When the when the when Tenkan is bended to the upside and the price come and touch it one time, second time, third time, you are certain that the direction is to the upside, right? That's a certainty. One time, two time, and the third time. That's a certainty that the direction is to the upside. So those number 1, 2, 3 are the direction triggers because of the number of touches. 1, 2, 3. So that's why I say here, set up 1, 2, 3. So I say here, after red pullback, the red pullback, Tenkan setup 1 is a good setup to continue with. For example, that's what we see on daily at this level. For example, that's what we see on daily at this level. You see, we have the red pullback at this level, and the first time that we touch Tenkan is here, one time, then second time, then third time, right? And you are certain that the price will go to the upside because of this number. So don't neglect the numbers. The numbers represent, or the number of touches represent also the direction triggers. Okay, it's a certainty. It's a certainty. The direction goes to the upside. The certainty for the price to keep going to the upside. Now, think about continuity plus reversing plus reversing at the same time, but prepare yourself to sell at the V breaker after the Tenkan setup tree in the void, and then go to M5, M15, H1 and sell the reverse Tenkan. So for this one, is that right? When the setup tree is hit, has been hit, right? You know that you enter here enter a buy at this setup, and then your take profit will be above here for a for a sell for a sell here, right? So you will be buying like this on H1. So you go on H1 and you already know the take profit on daily. That will be this V breaker, right? So you go on H1. When you go on H1, when you go on H1, you can literally buy on this Tenkan inverted H1 here, like this. And then your take profit will be, first of all, this V, this the level of this V breaker at this level. But everything above that V breaker like this is a sell opportunity for you. So when the Tenkan 1 hour would bend to the downside like this, and the price will touch Tenkan for the first time here, that's where you will be selling again. So that's how you trade setups. Because this one was at this level we had the what the third daily Tenkan setup, right? We had the third daily Tenkan setup, like the third daily Tenkan setup. That's what we had. So after the third daily Tenkan setup, create a V breaker above. We need to start selling the V breaker, the price that's above the V breaker, by dropping 2 time frame below. Okay. And now for the entry, buy the Tenkan H4 setup 1, 2, 3, maybe on daily too, on weekly too. Then sell the V breaker after the Tenkan setup 3 in the empty space by going on 5 minute, 15 minute Tenkan inverted. And the take profit will be, yeah, that's it. That's it. You can also do it on 4 hour, for example, here. Let's say, for example, that you bought a Kijun. This Kijun, you bought a um a 4 hour Kijun and H4 Kijun. When the price break this V breaker here above, you go on 15 minutes above here on 15 minutes. Any Tenkan inverted that you will be selling it. When you go on 15 minutes, the Tenkan inverted here, you will be selling. The first one didn't take a long sell, right? The first one was just a short one. It should have been gone on break even. But the second one, 15 minutes, this one went down for a longer run. All right. So that's how you do it. So now the last continuity continuity direction trigger is the Lofini that is not broken. What do I mean by that? The Lofini that's not broken. The Lofini that's not broken What I mean by that is what? I mean this. The price normally move like this, right? When the price has to go to the upside, it creates green candles, green candles, green candles. Here it will create a red candle, then it create green candles again. Green candles, green candles, green candles. Then it will drop down with a red candle. If the red candle doesn't break below this knee of Luffy, so it doesn't pass below and turn to the upside with green candle too. So it doesn't go below like this. Then this is a continuity. So this Luffy knee, if you hold the price and make the price go to the upside, is a continuity. It's also a direction trigger by the fact that it is not broken to the downside. The price just turn here and keep going to the upside. Let's also look at it on the chart. A Lafini that will the price. So let us look at this on this downtrend. Look for example this downtrend. You have a leg, Luffy leg here, right? You have this Luffy knee. So I can project the knee to the right. So the price went down like this to the downside, came back on the Luffy knee level, then kept going down, kept going down. So the Luffy knee hold the price and the price kept going down. The Luffy knee hold the price, okay? So it's a good thing. You also have it here, this Luffy knee. The price went down, came back a little bit above. It did not even touch the knee, right? And then went down. So that is a if this candle would have been broken above like this, this would have been a reversal type of trigger, but it's not. It's not. Okay, so that's all for continuity of the direction. That's all for continuity of the direction. The triggers that make the direction continue to one side. Now let's look at reversals. Reversal are different ones, different element that triggers it. Reversal element for direction triggers are first of all the fat ticket. First of all, we have the fat ticket. Right, for example, you will see that all of the fat ticket, like this one, this one are reversal element. Those are the reversal elements, like this one too, right? Fat ticket. If the daily or the weekly Kijun is wide at the bottom, it means that the price has touched a monthly Kijun. I wanted to say here, if the daily TK is wide at the bottom, it means that the price has touched the Kijun monthly. Therefore, the wish indicate an upward direction. So, let's say, for example, we take this daily big fat here, just right here, right? We go on monthly. What are we seeing on monthly? You see that on monthly, we are directly on a Kijun setup. And therefore, the price will go to the upside. Same thing with weekly. Weekly was already also fat here at the same level where
the Kijun monthly were touched. Weekly were also fat. And the fat, the big width of the ticket indicates that the price will go to the upside. It is so crazy that it's so insane, not crazy, insane, that Gosho Ozoda had that ability to actually find a formula where you do the sum of the 9 last candle, the highs plus the lows of the nine most recent candle divided by also the same 9, right? And then it will give you a point like this. And when I say high and lows, it is not the not the close of the position year or year, right? But the highs, that the maximum highs and the maximum lows, like highs and low maximum, right? Like it is insane. It is insane to decide that okay, I will do that. And then what is more insane is that the guy literally decided to put a cloud in front like this, and then to put Shiku backward like this. What if he wouldn't have done that? I don't know if I would have had the ability to read the to present you an Ishimoku Vegeta lecture of the context of the market this way. The guy is insane. That's why I believe he's one of the GOAT of the trading. I don't know how much he earns in terms of money, but you can be a good without earning that much money compared to others. Like in trading, only by the fact that you have created an insane indicator, mathematically wise, you are a good. So you see that an indicator that gives you a a clear a clear meaning of brother, since the price has dropped like this, drop. When you see that the volume is so wide this way, knows that right, that price will start now, rise. That's insane. That's insane, bro. So uh, a large daily or weekly ticket makes you buy in H4 or H1 reverse Tenkan. That's also true. That's also true. If you come right here and then you go on H4, you will see that you can start buying. First of all, you can start buying from this inverted Tenkan here, right? You can buy every inverted Tenkan at those bottoms level, all inverted Tenkan. You can buy all of them on H4. And then if you see a wide ticket toward, so the entry is that if you see a wide ticket toward down, yeah, in weekly or daily, go to H1, H4 and daily, buy the inverted Tenkan or the ticket cross or the inverted Kijun or the inverted SSA. That is exactly what I'm showing you here. You can just buy inverted Tenkan here, Kijun in cloud, CK cross, like it is a the YGK on weekly, as we saw, is just a trigger. This SSA inverted here. It's just a trigger. It's one of the trigger that indicates an uptrend that is so strong. That's why I place him first. And then your take profit will be on weekly or daily V breaker. Or on Lefini, or on Lefini at the left. If I go on weekly, so the take profit, since the ticket is wide like this, the take profit is just on weekly is just this high, just right here, from the bottom to this high. On daily, since it is also wide, and that is insane, nigga. That's so insane. So since this is why on daily you can have a take profit. Yeah, you have just the same take profit and like weekly, and then your position can then be done, can then be moving upward like bananas. A long, insane, crazy positions. Minimum. So that's why I put it as the first reversal element that trigger the direction. Then the next one is when you see the setup 3, 4, 5. In H4 daily, in H4 and daily is getting ready to a sell the V breaker for notching after. Okay, what I'm saying that here is that right? You are getting ready for a sell. Like get ready for a sell. At the V breaker in empty space after a setup 3, 4, 5 Tenkan is touched. Okay. Sell at the top of the V breaker. You go on 50 minutes, 1 hour, 5 minutes to take the Tenkan inverted. So let us take an example, just let's go on daily. Okay, let's go on daily. Let me do a small computation of the numbers. Look, for example, since the market has moved above, the first time we touch Tenkan is there, then the second time here, then the third time at this level, right? Then so we have 1, 2, 3 touch of Tenkan. So when you see the third touch of Tenkan, you take a rule, take a line, you place at the highest point on the left of the third touch, like the highest point on the left, and you say, okay, when the price will move to the upside, every candle above that high will be a reversal for a sell because we are already at the third touch. So now you go on daily. What you will be doing is that in that space above, you will take all Tenkan inverted and then be selling it. So for example, when Tenkan start bending down in 1 hour, like this, and the first time that we touch Tenkan, you start selling it, right? You start selling this one. It's sure that if you went on, then maybe 15 minutes, you could have a better entry just somewhere at this level. But this is already a beautiful sign that you can start selling it. And then obviously the take profit must be on on Kijun first, right? Obviously the take profit must be on Kijun. The take profit must be on Kijun. So when you sell in that empty space, okay, yeah, the take profit is first of all on Tenkan, then secondly on Kijun on daily, because where you find the zone of entry is on daily. Where you find the zone of take profit is also on daily. Okay, so that's cool. So now the next reversal element. So let me take a pause first. You will see that for with Ishimoku, right? The numbers 1, 2, 3, then 4, 5 create like the number 1, 2, 3, then 4, 5 are different type of number. They create different type of direction. The number 1, 2, 3 create trigger the uptrend direction. The numbers 4, 5 triggers the downtrend direction. So numbers by themselves, number of touches, those number are not like random number. They are number that has meaning, power, vibration. They vibrate differently. They give your brain different type of meaning for your capital. It means that if you were already in position for a buy at the first position, at the first touch, and then you start seeing number 3, right? And then you stay on the position, you don't move your position. Like you don't exit when number 3 arrive at the V breaker here. What will happen is that when you will keep leaving your position open because you don't know how to take profit, and then you prefer to wait, you let the number 4, the number 5, number 4, the digit number 4 and the digit number 5 exist while your capital were still growing, you will start be losing money. And it's not like the market is against you. It's that you don't use number to grow your account. Number 3 is the last number that will grow your account to the upside. And then when you grow your account to upside like this, right, you take profit after number 3. And then what will happen is that you should normally start being selling the number 4 and the number 5, and then start making profit also on number 4 or number 5. But the first position will always be being closed, and then this second position would be open to a sell. And then since you don't use numbers of touches, then you don't know how to take profit, and then you are like pretty blind. So You should not be like that. And that's why you struggle with take profit. That's why you struggle with take profit. Number has meaning. Numbers has meaning of growing account or reducing your account if you don't respect them. If you don't respect the numbers, it will reduce your account. Okay. So that's why numbers have meanings. So now, mm, it's not the same thing, the only thing that has meaning. You have also the fatness or the snake that have meaning too. The red pullback has meaning. The in-air price after a ticket fusion has meaning. Luffy knees not broken has meaning. Luffy knees broken has meaning. Like there are elements that has the potential to grow your account. And if you don't respect them, they reduce your account. So those are the triggers. So those triggers are on your side. You just need to see them and respect what they do for your account. Respect what they do for your account. They are not, those numbers are not here to make you have ego. Like, oh, you start to come out at the santi, you start feeling yourself as if you are a type of shit, a guy, the, the main character person. The main character person. No, you are not the main character person. What are the information that I'm delivering will are free. I'll put it free on the internet. So who do you think you are? You are like everyone else who is listening to this information. Who do you think you are? Lionel Messi? Very few people are Lionel Messi, are Luis Enrique, are Pep Guardiola, are Carlo Ancelotti, are Ronaldo, are Neymar, are Ronaldinho, are Samuel Eto'o, are the Ronaldo phenomenon, Maradona, Pele, Zidane, Robinho. Very few people are those type of main characters on their game, on their sport. Lewis Hamilton, something like that. LeBron James, Stephen Curry. Very few people are the main character that lead them team. And the thing is that you cannot even start having ego and start comparing yourself to somebody else's bank account because you don't even know how much somebody else has in his bank account. Even if you look somebody looking like a poor person, they are aware that people use a poor look to not get violent, to not get comment on dit, pour ne pas se faire agresser. Genre, il ressemble à un pauvre pour ne pas se faire agresser facilement. C'est-à-dire que I've seen, when I went to the bank, I've seen a lot of dads who look like dirty, poor, but man, the man is coming to the bank and deposit millions. He doesn't just want to get thieved on, to get, on dit comment, se faire agresser, se fait comment? Se faire agresser, quoi je trouve to get attacked, exactly. He just doesn't want to get attacked and got his money stolen, right? He doesn't want to get attacked and got his money stolen. So you don't have to have ego. You just respect those numbers and don't compare yourself, your bank, your result to another person's result, right? Okay, those number are not meant to make you start being the that girl, the main character, the person in the history. You are the only main character that you are, or the that girl you are. You are the that girl of your own life, not on the other people's life. So just respect the number. Just respect all of the sign of that trigger the direction. The next one will be the empty after a V breaker. The empty after a V breaker is the fact that the price moved to the upside like this, right? And then break this V to the upside. So that when the price is at the upside at this level, this one is already a direction trigger to the sell. Yes, it's a direction trigger to the sell where the price must drop, not till breaking this low, but just drop to somewhere here and then continue. Okay. The V breaker signal at the same time a continuity to the uptrend, like globally, the global continuation to the upside, but also a direction to a sell because the price will be in the empty space. Let's look, for example, what is happening on USD GPY now. The price moved to the upside, created this low, then moved again to the upside. You see, the price broke this level. Let me even do it better. The price moved to the upside, created this low, moved again to the upside here, created another low, moved again to the upside, created this next low, then moved again to the upside, created this next low, and then move again to the upside. You will see that the price V break this one, then V break this one, V break this one, right? But after each V breaks, like the candle that's above the horizontal line of the break, make the price drop till this point. The price that's above the horizontal line of the break, like this, make the price drop till this point. Every price that's above the horizontal line, make the price drop. Like it is a direction trigger by its nature. By its nature. Each time that you break a high like this, the price, yes, the price will move a little bit to the upside. I have no problem about that. But that movement doesn't mean the same long movement that it did from the bottom on in the low, in its maximum low. It didn't move, it didn't keep moving like widely to the upside. It means that the V break by its design is already a trigger for a cause, a root cause for a price that will drop down. You can see it on any situation. On any situation, this V break also, the price just move a little bit to the upside, then drop down. Even this V break, the price break and then move a little bit. Compared to this one, to this movement to the upside, this one is so small. So the V break in the MT cause the price to drop. So anytime that you see a V break, let us look at what is happening on Bitcoin now. We have a V breaker on Bitcoin. Just, yeah, you see this bottom. The price move below that bottom. You will see what the price will do. The price will now go back to the upside. Somewhere, okay, the best the first place where the price can stop will be at this level before keep going down. But the fact that you break to the downside like this is already an indication, a trigger to a pushes. So in H4 daily, weekly, monthly, after a long rise of KSB, there is always to be a sell after a V breaker in the void at the top of the week, especially when the price Tenkan ticket cross gap is really wide, or when you are in the middle of a 3 to 12 month setup. So if you go for example on monthly, you will see what is happening, and what's happening is very beautiful. I said when KSB goes to the upside this way, right, and the ticket cost is wide this way, okay, and we have a V breaker, like all of this part above the V breaker is already what do I call it? A trigger of a downtrend direction. Each V breaker is a trigger of a downtrend direction. So just remember that each V breaker make the price move a little bit to the upside, but not as much as when the price came from the low. It will just move a little bit, this quantity, then it will drop. So that movement a little bit to the upside, it's just like a type of natural movement, because for you to go down, you need to go up a little bit more. To go down a little bit, a little bit better. So that's it. So draw a rectangle between the body and the void, like the empty space at the top of the air cut after, when I say air cut, at the top of the wick, after the V breaker, between the void and the top, between the body and the void at the top of the wick. Okay, so what you need to be doing is that at this level, you take a V break, this V resistance, and then what you need to be doing is that take a rectangle like this, and on monthly, do this way, and each candle that will be above the body and the wick are just reversal. You are just at the reversal there. Then you need to take of selling. Same thing is close to happen at this level. We are close to have the same element here. You take just a rectangle like this, and then you prepare yourself to sell this market between this in this space. That's where you prepare to sell the market. You will be selling the market inside that space. That is exactly what you need to be prepared of. And then when H4 daily, weekly breaks their V breaker, sell quickly. So you see on M5, M15, H1 Tenkan inverted, ticket cross, and Kijun inverted. So I said that, let me take an example just right here. You see, when the price broke the top of this week, you could have just went and sell this part of the chart on H1, right? Because H1 is just a timing entry. It's not a root. It's not a root time frame. It's a timing time frame. So each Tenkan inverted at that level, right? Like you just come and you sell this one, then sell this one. All Tenkan inverted, you just sell inside that position. This one will have need a faster um, you just sell anything, like sell all Tenkan inverted inside that space. Sell anything can inverted inside that space. That's crazy. That is like the best, like, oh my brother. And that's what is happening now on USA GPY. That's what is happening now on USA GPY. That's what is happening now on USDG point. Like on monthly, if you go on monthly like this, and then when we will be breaking this next high, this one. First of all, this one before breaking this all-time high. When we first of all break the first one, the the price just a year above, you will just go on H1 and start selling that everything can invert it. It's so crazy, nigga. It's so crazy. Even if you are not a nigga, a black person, there are some white people who look like nigga, like Eminem. It's so insane, despite who you are. It's so insane, so insane. And then the take profit will be obviously Tenkan or Kijun on H4 and daily. If you go on and sell at this level, right? If you sell anything here, your next take profit will be a Tenkan, something like that. Like the same thing that happened at this top. Like if you have sold something like this high, the next take profit will have been this Tenkan daily. Even if you sold here, Tenkan daily, you sell here, Kijun daily. Like those are the take profit for this type of movement. Now let's look at Tenkan hitting VRS on the left resistance or current support. Tenkan hitting VRS is that right? When the price moves to the upside this way, okay, the price will leave weeks and weeks like this, weeks, while Tenkan is moving to the upside too. And then if Tenkan arrive inside the support, the lows, the week of the lows that have reached like this, you will see that when Tenkan will enter inside this zone, the price will start moving down. I didn't say moving down till breaking this bottom, but the price will just move down because that's how Tenkan, that's how it works. And then even the resistance on the left like this, if Tenkan move right and then enter inside this zone of resistance, the price will also move down. It triggers the direction to the downside. The fact that they can enter inside these zones. So when I say Tenkan hit VRS, right? Hit in general, I was previously in my previous explanation, I saw that it is only the resistance, but I added up the support too, because if you see, for example, if you see, for example, let's take this case. This one is a week, right? Or monthly. When Tenkan entered at this level of Tenkan, see what the candle did. The candle went to the downside. When Tenkan entered inside this support, the candle went to the downside. There were no resistance at the left from this point. There were no resistance weak. The only resistance weak were, first of all, the and Tenkan also created this, attracted the price. So even the support create that, even the support of the lows of the week of the lows make is a trigger direction to go to the down toward the downside. So that's what I'm saying here. In weekly and monthly, there will be a reversal when the can touches the the week of the resistance on the left. The weeks, I don't know the word strands. Strands means what? The transition one. And then weekly, monthly, there will be a reversal when the can touches the support. This one is the support. Why is it the support weeks? The transition was maybe half as the support which if in addition to that there is a V breaker in a void, the reversal will be very strong. Obviously, for this case, in addition, for this one, there have been a V breaker and then the reversal was actually strong. So draw a rectangle passing through the wrist, through the wick, through the wicks of the resistance on the left and the support, and also on the support in progress, and be ready to sell H4, H1, 15 minutes. Yeah, you just go on H4, H1, 15 minutes to be ready to sell this. So it's the same thing that will happen very soon. Let me do also on. Let me also do this just right here. We are close to see it happen also. During this period, like this, when Tenkan will come and enter, I don't know when, but if Tenkan come and enters in 2 months inside this support zone, the price will drop down, and obviously the take profit are always the next highs, the V breakers. So now, lastly, the reversal element, the reversal trigger, the reversal trigger element. The Lafini that is getting broken. The Lafini that is getting broken. Let's say, for example, we go on so first of all, let me explain to you. When the market goes like this, drop down to this level, and then start going up with green candles, go up, go up, go up this way, and then go up again, go up, go up. If the market drop down, right, and then break below this Lafini like this, there is a probability for the price that this one will be a reversal. Okay, let me go and see it on H4 a little bit. Maybe on gold. The gold wrapped. Maybe on gold. Not. Okay, let me take this example. Okay, the price move and create this whole Lafini this way, right? And then this whole Lafini leg, and then this was the Lafini at this level. This Lafini has been broken to the downside, right? By this week, first of all. Then the price tested the zone and then went back down. Okay, that's a little bit what I'm saying. But that doesn't mean that the market is wildly reversing. That's why I'm saying that, right? This thing of having just a naked chart, this thing of just using a naked chart to make decision is not good enough. But when you see Ishimoku, yes, the Lafini has been broken to the downside. It's just a correction to go and touch Kijun. Then the market keep going up. So you should not think in terms of Lafini. You should think in terms of all of the element that I gave you for the direction. You have many elements. The high pullback, one of the basics, one of the strongest one. The price in air after TK fusion, the setup, the snakes. Lafini is I even place Lafini at the end just because it sometimes work, it sometimes doesn't. It sometimes means something, it sometimes doesn't mean anything. It's not that big of a deal. It's not that big of a deal to respect Lafini. Not the empty chart is not enough. The empty the empty chart when you remove Ishimoku like this. What? If you remove Ishimoku, I cannot read anything anymore. The same way that I read with the chart. And it's not a type of comparison. And as I will start like bragging about it, I will start like feeling weak. So it's not like I will start feeling weak because if I use only a naked chart, I cannot read. I cannot read the market. I'm forced to use an indicator to read the market, right? To read the market. So I'm only good with indicator. What the fuck? Nigga, it is not the it's not a competition. Eh? It's not a competition. We are here to make money. We are here to make money. We are here to make money. It's not a competition. Oh, I'm good with a naked chart. You are not good. Guy, you are not good with a naked chart. You're not that good with a naked chart as when you are using a Ishimoku indicator. And I don't use any moving average because moving average doesn't give me the same language system like Ishimoku. The only you will see that I don't use moving average like the only reason why I don't use moving average is because moving average take they take the close of the close of the candle. Meanwhile, Ishimoku take the extremity of candles, right? What does that change on 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 the graphics? You will see that Ishimoku has plateau, like plateau, and plateau means that the price is attracted toward the line. But you will see that moving average will always be smooth. There will not be a straight up squared indication, like straight square indication that shows you something. But they are almost similar, but they don't give the same lecture, the same language system. Secondly, Ishimoku has a cloud that is in front of the price in advance, 52 candle in advance, 52 hours, like 3 days before the candle I have at the resistance, Ishimoku give the resistance. And moving average doesn't do that. So it's not about using indicator. It's about having a language system that is better
to know where the price move at any time for any candles with only one observation. In few seconds, you look like this, few seconds, Ali, you can take a decision. The most important thing is not about, oh, I use a naked chart, you use indicator, so those who use indicator are very weak. It's so complicated. It's not that. The goal is like, are you able to read all context at any time without confusion, with certainty, with great interpretation? Your read rate is better with Ishimoku. Like, you have the greatest read rate with Ishimoku. The greatest read rate. Read rate with Ishimoku. Vegeta, by the way, not just Ishimoku, because what I see out there on YouTube is so crazy. I'm so deceived by most of the videos that explain Ishimoku. And I know that even Go shows that did not explain whatever I'm explaining. I just find him insane in terms of mathematical calculation, and there are some few good points that he made that are very good about um, about how to use Ishimoku. But what I brought in the market is another type of reading lecture that took me a lot of hour of observation, and that is the language system that I propose to you guys, to the community, like the result of my researches. So just don't remove any line on Ishimoku. All of the lines are very important, but just be aware that that's it. Just be aware of not feeling weak because you use Ishimoku. By the way, you need to feel at your best. At your best. It's not a comparison of, you are not comparing yourself to anyone, even if you do the e-sport trading or use Ishimoku, don't use Ishimoku. What the fuck? So in conclusion, for this direction trigger theory, for the direction trigger theory, right? You have everything that make the price move is, first of all, the economic news data, CPI, NFP. So 3 days before, the price will move to a direction. Then the fact that the inclination of lines like Tenkan, Kijun, Benjing, SB will move the price to a direction. The crosses, right? The crosses, sticky cross, KSB, SS, right? Even Shiku price. Each one have their ability to say something about a direction. They trigger a direction. The continuity, then the continuity triggers. You have the best continuity trigger is the red pullback, right? When you have a red candle like this, the price move to the upside, create another red candle that need to touch the previous red candle for the price to continue moving up. Then you have I think the snake. Okay, the price in air during fusion, like you have a fusion of Tenkan and Kijun like this, the price is down here, not touching Tenkan, not touching Kijun. And you go on SSB, you do the TS2 method. If you were on H4, you're looking at that fusion, you go on 15 minutes and selling that air on when the price touch SSB 15 minutes. Then you have snake when the price has, when the TK has, Tenkan and Kijun are inclined to the same direction at the same time.
Then you have that the numbers, they set up 1, 2, 3. The numbers give you trigger also a direction to the same to this to one side. And then if the Lofini is broken, right? The Lofini is broken is not the most important. So the Lofini is not broken. Like the price we're moving through upside like this. This is the Lofini. The price come and bounce on the Lofini and then continue to upside. It's not the most important thing, but you can actually look at it like one of the element of the direction trigger. Then you have all of the reversal trigger, right? Like one of the greatest one is the very large Chike cross. When Tenkan and Kijun are very large like this, the price will drop down, right? Then you have the setup 345, which is the second base, like 345, like you go on the V breaker and you sell above when the price break the V breaker after the third Tenkan touch, right? You sell. Those are the direction triggers. Then you have the MTV breaker, same thing. Like the V breaker itself is a trigger to the downside. Those are the trigger to the downside. There was the trigger to the upside. And then Tenkan hitting various. I forgot to mention something. I feel like I forgot to mention something. I needed Miguel. This Tenkan Vira is not the only Tenkan that make the price drop down. There is also Tenkan cover. It's now that I remember about it. But Tenkan cover is one of why did I even forget Tenkan cover? I thought of putting it there. Tenkan cover. It's not like frequent. It's not like frequent. Tenkan cover means that, right? I thought about you already. I explained to you it already. Like the price come and touch Tenkan one time, then second time, then third time. And then you will see that for the fourth time, the candle stays below. The candle stays below Tenkan, and Tenkan is like a cover like this. And then but the fact that Tenkan act like a cover like this, make the price to touch Tenkan inverted, and then the price drops. It's also a direction, a trigger for the downtrend. But I didn't put it. I don't know why. I don't know why. It's very rare. It's very rare to see it, but come on. Anyway, anyway, the last one will be the Lafini broken. Like the price moved to the upside like this. This is the Lafini, and then it got broken, and then the price go down. It doesn't mean it's a fat ass reversal, like a huge reversal to no. That's why I put it last, because it is not like the most important over all of these ones. Over all of this one, it's not the most important. Okay, let's now go to the volume theory. The volume theory is one of the most important theory over all of this. It's very technical. When you master the volume theory, you can have like you can hold position, make some crazy profit. Volume theory will, you know, we will see it. The volume theory will tell you that if the price were moving to the upside like this, and there is a zone here, right? And then you started selling the price from this point. You enter at the sell here above, and the price is going down. Will this zone hold, or hold the price and go to the upside, or will it get broken to the downside? The volume theory will answer to the question about if the speed on a structure hold the price. If a speed on a zone, right, inside the zone, will the speed of the price break the price to the downside? Yes or no? That is what will happen. That is what will happen or not. Use the volume theory to read that. It's very technical. And, and I feel like I finally had something because I've been asking myself like a lot of questions. How do you know that this zone will hold or not? How do you know that if it is a buy, there will be 0% chance for the zone to get broken down and 100% chance for the zone to go up? How do you know that? That's the most important question for any strategy out there because this question is a context reading question. Volume theory is a very technical and very good skill, good technical skill to have. So let's look at it.